Okay, we're going to be looking at the recording of the disposal of an asset. Now we're looking at the disposal at the beginning of the year, which is the easiest form of disposal to account for, because then you don't need to worry about taking out any current year depreciation, because you depreciate an asset up until the date that it's sold. So if you sell it at the beginning of the year, it's much easier because we only need to take out opening balance, accumulated depreciation. We don't need to worry about accounting for current year depreciation and then taking it out. Okay, so it says when we sold trading stock, we credited the trading stock account. So trading stock being an asset. And if you have an opening balance and whatever is sold goes through cost of sales, and it is credited as we no longer had the stock. Thus, the ledger account had to be appropriately reduced. It is important that the ledger account shows the actual position of the stock. So we can't sell stock and then not take it out here, and then it shows we've got stock of 100 Rand when actually we have stock of say 20 because we sold 80 Rand worth of stock. So we need to show the actual position of the stock in our business. So just like stock, if a vehicle is sold, we need to reduce the respective account. So if we have vehicles and we have a vehicle of 100 Rand, if a vehicle is sold, we need to do the same thing just like we did with trading stock, because it needs to show the actual position. We can't have vehicles at 100 Rand if we sold a vehicle for 100 Rand and then it's not reflected like that. Because then if we look at our books, we'd say, oh, we've got vehicles worth 100 Rand in our books, but actually we disposed of it, and that's not true. Okay, so the complication in respect of a vehicle being sold is that there are two accounts that are then affected by this. First one is motor vehicles, and the second one is accumulated depreciation on motor vehicles. So they both need to be cancelled. So just like we took 100 Rands out of the book relating to the cost of vehicles sold, we have accumulated depreciation on motor vehicles. If we have accumulated depreciation of 80 Rand, we would have to do the same thing and take it out of our books of 80 Rand, because we can't now say take this motor vehicle out the books and then our books still reflect accumulated depreciation relating to this vehicle if we've actually sold it. So we need to then take both of them out of our books. So that's where the complication comes in, because we need to adjust both our motor vehicles and our accumulated depreciation on motor vehicles account. So here it says what would happen if you only cancelled the motor vehicle account. So there are various options possible if you only cancelled this one, the motor vehicle one. You could transfer the accumulated depreciation to the motor vehicles. So in other words, it's saying you could transfer it there, because the book value is then cost minus accumulated depreciation. So if you had to do that then and take it to there, then it would reflect the carrying value of your vehicles. Or transfer the motor vehicles account then to the accumulated depreciation. So you would then account for the vehicle in the accumulated depreciation. But please do not do this. I actually hate that they included this in your textbook and said, here are the possible options, because this is not how we account for it. This is how we account for it. So we don't transfer accumulated depreciation to vehicles, and we don't take vehicles to accumulated depreciation. We have something that we call asset disposal. So we open a separate account which we make all the entries relating to disposals, and it's called asset disposal account. Particularly if you have more than one vehicle, otherwise you could get confused over which entries relate to which vehicle. So in this instance, they've given us a motor vehicle account, which is an asset. So we know it increases on the debit, decreases on the credit, and it shows that we then have this motor vehicle and we've now disposed of it. We've sold it. It goes out of our books, so it goes to the credit side of the motor vehicle, and it goes into this account called asset disposal. So if we account for a transaction where we credit motor vehicles with 75,000, we then debit this account called motor vehicles with 75,000. The asset disposal T account is not a T account that's reflected in your statements. You're not going to find in your financial statements a line item called asset disposal. Why we do this is so that you'll see as we go on, the main reason we have this disposal account is because then it's much easier for us to calculate if we made a profit or a loss on the sale. And that profit or loss on the sale goes into your statement of comprehensive income. You'll see when we go to the next exercise, there'll be a profit or loss on disposal, then it will make more sense. So this asset disposal account is just purely like a calculation account, and that's where we take then the disposals of our assets to. So we took the vehicle out of our books, and because we credited motor vehicles, we then debited the asset disposal account with 75,000. Then, just like we said before, if you take the motor vehicle out, you need to also take the accumulated depreciation relating to that vehicle out of the books. So we have a balance of 30,000, and now we dispose of a vehicle, so we now need to take it out of our accumulated depreciation account. It's a negative asset, so it will decrease on the debit side, and it goes to your asset disposal account. So you would then debit accumulated depreciation and credit your asset disposal account with the accumulated depreciation that you have now removed from your books. So if we look at task 4.10, it says, explain to the person sitting next to you, okay, but we're going to do it together. So the first one, it says, what has happened to the motor vehicles account and why? So all they've given us is the asset disposal account, and they want to know what has now happened to our motor vehicles. So we have an entry on the debit side of our asset disposal account of motor vehicles. And in order for that to happen, that we debit our asset disposal account, we would have had to have credited our motor vehicles account with 75,000. So what had happened to our vehicles account is it was credited because we sold it. So our account needs to reflect this. If we sold the motor vehicle, then our account needs to reflect it, and it needs to go out of our motor vehicles account. Then they want to know what has happened to the accumulated depreciation and why. So if we look at our asset disposal account, we credited it with accumulated depreciation on motor vehicles, and in order for us to credit our asset disposal with 30,000, we would have had to have debited our accumulated depreciation with 30,000. So just like when we sold the vehicle and we took the cost out, we have now taken out the accumulated depreciation relating to the vehicle that was sold out of our books. So we debited then our accumulated depreciation, we decreased our negative asset, and we credited our asset disposal account. Then it says, what is the function of the asset disposal account and why is it better to open this separate account? So the reason we have this account is because it brings all the entries together with the sale of a vehicle. We're dealing with a vehicle in this instance, but it would deal with the sale of any asset. So it brings all those transactions together. We can then see the cost of the vehicle that was sold in our asset disposal account. We can then see all the previous accumulated depreciation on this motor vehicle in one T account. Then we don't have to refer to different T accounts to try and see what happened, because in this instance we just have motor vehicles and accumulated depreciation on motor vehicles. But in a business there are many ledger accounts and it can be very difficult to follow what happened. So that's why we have an asset disposal account, so that we can have a summary of everything that took place relating to the sale of, in this instance, a motor vehicle. So it's like a matching principle. And it is also then much easier to calculate if we made a profit or loss on the sale of an asset, which you'll see in the next part of the question. So it says, according to your books, do you still own the motor vehicle? And the answer for that would be no. Because if we had a motor vehicle on this side and we've now taken it out of our books, we don't have the motor vehicle anymore. If you sell the vehicle for 50,000 Rand cash, what entries are necessary? So if we sell it for 50,000 Rand cash, we would then, because we sold it for cash, it will affect our bank. If we had sold the vehicle on credit, it would then affect our debtors control. But in this instance, they want to know what happens if we sold it for cash. So you would debit your bank and credit your asset disposal, because we said our asset disposal is a summary of everything that took place relating to the sale of an asset. So you would then credit your asset disposal with the amount that you sold the asset for. So if 50,000 Rand cash was received, an entry would need to be made in the cash receipts journal. The bank account will increase. Why do you think we made the contra entry in that asset disposal account? That's because we said it's a summary and we want to reflect everything relating to the sale of that asset. And then we can also then determine if we've made a profit or loss. So as the entries regarding the vehicle, the 75,000 and the 30,000 have been transferred out of those accounts to the asset disposal, you cannot make the entry for the cash of 50,000 Rand in either of those accounts, and why not? The book value of the vehicle is 45,000, and we see that because we took our cost minus the accumulated depreciation to get our book value, and the selling price is 50,000 Rand. So that means we have sold the vehicle for 5,000 Rand more than the book value. So if we sold it for 50,000 and the book value was 45,000, we then made a profit of 5,000. It is necessary to record the 5,000 Rand in order that the ledger accounts are closed off. So the 5,000 Rand, we then record it in our asset disposal account so that the account can be closed off and it can balance. Remember, you do not own the vehicle anymore, so there must be no entries relating to this vehicle in the books. That is why it said we cannot then record the amount that we receive for the vehicle in either the vehicle or the accumulated depreciation, because we do not own the vehicle anymore. So it needs to be out of our books. We can't reflect anything relating to this vehicle in any of the accounts. So we saw we made a profit on disposal of assets, and profit on disposal is an income for your business, and we know that income increases on the credit side. Okay, then we can look at 4.11 together. It says, what has happened to the asset disposal account and why? So what happened to the asset disposal account was we balanced it off, we closed it off, so it now has been balanced off. The debits equal the credits because we calculated the profit on the sale of the asset. So because we calculated that profit, we have now balanced the asset disposal account and it agrees on both sides. Then it says, what does the 5,000 Rand mean? So what it means is we made a profit. We sold the asset for 5,000 Rand more than what it was worth on the day that we sold it. The vehicle was only worth 45,000 and we sold it for 50,000. So it means we sold it for 5,000 Rand more and we made a profit on the sale. Why do we have to show the 5,000 Rand in the books? Because we have to balance and close off the books, which is what we did here. We balanced and closed it off to show that we made a profit. So that's why we have to show that 5,000 so that it balances. Why is the 5,000 Rand recorded on the credit side of the profit on disposal? Because it is an income for our business. So we said that income increases on the credit side, so that's why it's on the credit side of that general ledger account. Then what entries are in your books after completing the sale entries in connection with the motor vehicle? So after we have sold the vehicle, the only entry left in our books relating to this vehicle is the profit on the sale, because the vehicle and the accumulated depreciation account has been closed off. We saw that here. We had taken it out of accumulated depreciation to our asset disposal account, and we took the cost of the vehicle out to our asset disposal account. So those two accounts have been closed off. So the only thing still reflecting in our books relating to this vehicle is the profit. Then what would happen to the profit on disposal of account in the financial statements? It gets closed off to the profit and loss account at the end of the financial year. You will have an item in your statement of comprehensive income called profit or loss on disposal, and this 5,000 Rand would then be reflected there under other income. So that's how it affects your financial statements. Okay, then I want you guys to please slowly work through this example under 4.11, because we owned two vehicles that were used, and now the financial period ends and they tell us that the vehicle at a later stage was sold. So the owner decided to sell the vehicle, and they want to know then what entries are needed to be made to record the sale. They give us the selling price of 12,000, so then we have to make the entries relating to that. So then we need to take it to our asset disposal account, determine did we make a profit or did we make a loss. And then this is just one step further. They want us to then record the entries in the correct journals, which they did here, the cash receipts journal and the general journal. So please work through this example so that you can get a better understanding of asset disposal. It is also a nice example because it shows you everything relating to these assets. You've got your general ledger, you've got your fixed asset register showing the value of your vehicles. Then you've got the sale, and it's showing that in your disposal account, and it's even showing the journals that are affected by each transaction. So you can get a full picture of what happens when a vehicle is disposed of. So please work through this example so that you can get an understanding. If there is anything you're unsure of relating to 4.10 and 11 that I just did, all the explanation here, anything of asset disposal so far that you're unsure of, because this is the basics of it, and I need to make sure that you understand it now before we move on, because once we start disposing of an asset in the middle of the year and no longer at the beginning of the year, then it becomes more complicated, because then we have current year depreciation that we also have to take into account. So the one at the beginning of the year is the easiest to deal with. So if there's something here that you're unsure of, please ask now before we move on to more complicated examples. I hope this makes sense. You need to understand what is going on before we get to more complicated situations and it's disposed of at different times of the year.